Please join me in welcoming Dr. Leroy Laney.
Well, thank you, Brian, for that very kind introduction, and it's my pleasure to be here once again. It is the 22nd year that I've done this, but it's always an honor to come back. This is the 37th Maui Business Outlook Forum, and it's over the years become a real tradition. Let me now take an underlying look at the Maui economy by sector. I'll start with tourism, which is obviously the main industry here on Maui. The Maui visitor industry is doing extremely well, especially when one considers the lingering effects of recession in its major markets. Part of the reason for that lies in the fact that Maui continues to hang on to a reputation as a very upscale place for a tropical vacation, and that's an asset that is extremely valuable, especially as more competition enters the market. A major underlying reason for this better performance in 2011 has to do with increased airlift. Total airline seats for Maui have increased dramatically so far in 2011, with far stronger growth than elsewhere in the state. Honolulu's been up about 3%, and Kona's loss last year of the direct JAL flight resulted in about a 6% decline there. Kauai's shown healthy increases in airlift this year of about 6%, but these numbers tend to be dwarfed by Kahului's surge of over 11% in seats this year. Early next year, Hawaiian is going to add 3 weekly flights from San Jose, and they tell me that the booking window is also expanded, even if only slightly. A big reason for the increased airlift is the fact that Maui has been picking up direct flights by Hawaiian and Alaska Airlines from secondary cities in the United States as well as Canada. And that, combined with aggressive marketing in those cities, has paid off. Canadian business has been helped by the strong exchange rate against the Canadian dollar. And on the airlift side, DOT Airports has reported that conversations have been underway with several other carriers to enter the direct Maui route. The strong visitor industry has enabled Maui hotels to raise their room rates. Now, once again, Maui has the highest average daily room rate in the state, so reputation does pay off. Sources on Maui have also mentioned another comparative advantage, even within the state. Maui has most things a large city has to offer, but it continues to retain a rural environment and ambiance. And if you add to that a very wide range of activities that is available to Maui visitors, you have a combination that is really hard to top. The visitor spending growth shown in this chart is impressive. I don't think that should be taken to mean that the good old days of unrestrained spending growth will ever return, at least not for a long time. While there is pent-up demand, there has been a shift toward shopping for value that wasn't there before the recession and before the wealth losses of recent years. One major reason that Maui lags in job creation is weakness of its construction sector. And I mentioned that at the statewide level just now, but it's particularly acute on Maui. And that's quite apparent from this slide showing the continued job losses in Maui construction. Residential construction is weak just about everywhere nowadays, of course, with short sales and foreclosures causing continued downward pressure on home prices. It's simply cheaper to buy an existing home than a new one, or perhaps just rent until prices fall further, so developers just simply aren't building. Maui does have some things that are added hurdles that we've mentioned in previous reports here, the 50% affordable housing component requirement and the Show Me the Water ordinance. We have mentioned both of those things in our previous reports. Help may be on the way for Maui's construction industry. A conversation this year with the mayor indicated an awareness of this problem and perhaps a change in attitude. He's pushing, he tells me, more public sector construction and expediting in the permitting process. So maybe next year in this chart, on Maui construction permits, we can show you greater optimism. There are also some other signs that Maui construction numbers may turn up in the future. For example, on the visitor plant side, Hyatt is planning a timeshare tower in West Maui. Renovation of the old Stouffer property in Wailea could be revived. So those are all possible optimistic notes. I always pay a call on A&B. A couple of eminent A&B projects will also boost construction in the near term here after long years of planning and reversals. I'll mention a couple. Maui Business Park Phase 2, the 179-acre light industrial development, is ramping up in Kahului. And then, of course, the Courtyard by Marriott Hotel in Kahului, a 138-room property, I'm told has already had a groundbreaking. I think Kahului has long needed a newer business-oriented hotel near the airport that can also perhaps serve travelers on canceled or missed flights. So that's some optimism injected into the picture. Maui real estate is subject to some of the same trends I mentioned on construction. In 2011, sales for both single-family and condo units have leveled off after strong increases in 2010. And median prices for both single-family and condo units have continued to fall some. Until the downward pressure on prices abates, there can't really be a sustained recovery in the real estate market. And that has to do with the aforementioned inventory of short sales and foreclosures that constitutes an overhang on the market. Recovery in this sector almost always accompanies a broader sustained upswing in any regional economy, but we'll have to wait a while on that, I think. Nonetheless, the usual caveats apply on reading too much into price trends on Maui and real estate data for any of the Hawaii's neighbor islands. The small sample size simply distorts the numbers, and you have to recall that there is a mix of disparate transactions in dissimilar neighborhoods that comes and goes and provides some noise in the data that we ought to just ignore. In commercial real estate, recent sales have tended, I'm told, to be very strong because prices have fallen far enough to bring buyers into the market. Some of this buying activity reportedly is for investment over the longer term. Sources I talked to this year state that interest does tend to be rather spotty over various areas of the island, and it depends a good bit on quality. Well, so much for real estate. As far as retailing is concerned, as usual in Hawaii, there's some differences in the retail sector between the local side and the visitor side, and that continues to be true this year on Maui. Visitor-oriented retail is doing quite well in line with the robust recovery in the tourism industry. And the visitor side, in turn, is strongly influenced by occupancies in nearby visitor plant because foot traffic is greater if occupancies are higher, so that the nearness or near proximity of timeshare units is always a plus. Occupancies are always higher in those units. The local side in retailing, even though it is recovering, continues to reflect some of the uncertainty about the overall economy. One growth area in the Maui economy, relatively unfazed by recession, I always call on the college. Last year it got a new name, UH Maui College. That name change reflects the addition of 4-year degrees. At the same time, its accreditation has moved from the WASC, the Western Association of Schools and Colleges Junior Commission, to the WASC Senior Commission. Student enrollment growth recently has been quite rapid. UH Maui now has almost 4,400 students, I was told. That represents a 33% increase over the past 2 years. And it also hangs on to its position as a top grant recipient among the present or former 2-year colleges in the UH system. The newly completed $25 million science building, I mentioned that in last year's report, has been ready for occupancy this fall semester. Maui Economic Development Board in Kihei continues its economic efforts. MEDD activities continue to be enhanced by the supercomputer located there. Other tenants have proven to be fairly resilient to the recent recession. MEDB continues to focus on renewable energy projects and educating educators and women in technology program. One newer development is the Joint Technology Information Center program, which involves a $36 million grant to develop and test medical technologies for military applications. And MEDB continues to host the Advanced Maui Optical and Space Surveillance, or AMOS, conference each September. Agriculture on Maui, I always pay a call on HC&S, and agriculture on Maui is usually dominated by HC&S, Hawaii's sole remaining sugar plantation. There, things have been looking up recently, with annual production back in a profitable range after a couple of years, 2008 and 2009, of very low total production and yields per acre. Better age on the crop and a slightly better rainfall are the main reasons for the recovery. HC&S told me this year that it estimates production should be about 85,000 tons this year. That's a little lower perhaps than the 200,000 ton range that might be more desirable, but it is an acceptable number. HC&S remains important to the Maui economy for other reasons than the fact that it's simply a large employer and it keeps the Central Valley green. It also provides enough power to the grid here that it's actually a net energy producer than a net consumer, so that when energy prices rise, HC&S actually benefits. Well, to summarize, the bottom line for Maui this year is sort of a mixed bag. The visitor industry is doing extremely well. The saving grace for Maui tourism is the resiliency of its upscale image. That perhaps does have a downside in that the image might keep some larger families and others away because of the anticipated overall expense of a Maui vacation, but the image is not one that Maui would rationally give up. And on Maui, more than a lot of similar destinations, there does seem to be a greater recognition on the part of local residents that tourism is critically important from an economic standpoint. But even that leading sector can't be relied upon completely to bring Maui back to better times. And other sectors of the Maui economy are lagging. Evidence that I presented here today shows that a major missing link is construction. Residential construction, of course, is down practically everywhere, but any progress to resuscitate overall construction, public or private, here would result in a more balanced and sustained recovery. Efforts to diversify the local economy are ongoing and they are admirable, but the smaller a local economy is, the more elusive that diversification goal becomes. Depending on how economic activity is measured, practically all economies now are still below their pre-recession 2007 peaks. And given the slowness of the recovery, it could be several years before those pre-recession levels are finally achieved. In Hawaii, all the neighbor islands still have further to go than Oahu, and Maui has got a little bit further to go than the other two neighbor islands. To give you some numbers there, at mid-year 2011, Maui was just over 11% below its pre-recession peak for non-foreign jobs. That compares to 9.8% for Hawaii County and 8.8% for Kauai. Oahu was only 3.1% below, and that averages out to that number that I gave you earlier of about 5% statewide. It doesn't really, you're not talking about much here, and it doesn't take much to change those rankings, and those rankings don't really mean a lot anyway, but it should be Maui's first order of economic business. And so I had better conclude on that, and as Jack mentioned, we will take a few questions, I think, if we've got time. I thank you very much, though, for your attention.